again from Core Wealth. We're speaking to you on a Tuesday after a nice long weekend where we've had some really good rains, which is great for our dams, and we celebrated Women's Day over the weekend. To all the ladies out there, we wish you all the best and thank you for all that you mean to us in our lives, in our families, in our businesses. We're going to be chatting about what happened in the markets in July, and we're also going to be talking and answering a few questions that we've been getting quite regularly from a number of our clients in recent meetings. If we have a look at some of the important information that came out in July and more recently about July, we saw that the economic growth rates around the world were a lot lower, and that because of the lockdowns from Corona. The US economy shrank by 32.9%, which was severe for the second quarter of this year, April, May and June. We've just seen numbers coming out for July itself on the manufacturing side, so how are factories doing in countries around the world, and it's been good to see that both in the US and in South Africa that there is growth in the manufacturing sector as activities have picked up again. Some of the other things that we've seen globally, interest rates are continually being kept low. The Fed has come out saying that they expect to keep interest rates in these low levels for about 2 years. In South Africa, we saw another 25 basis points or 0.25% cut coming through in July. And all that just trying to ease the burden on both businesses and individuals in terms of how much interest they pay, so that those funds can rather be plowed back into the economy and get the economies going. Two things just looking forward that we think are going to be big news items for the rest of this year. One is obviously the US elections, and there will be a lot of noise around that. Initial indications at the moment put Trump as being behind Joe Biden, but we'll have to wait and see how that pans out over the next 3 months. The other thing is a cure and a vaccine for COVID-19. That is progressing on a number of fronts, but until that is found, there is that continued uncertainty. Once we have a vaccine and especially a cure, we think that'll be a good boost for economic activity around the world. So if we have a look at the financial markets during the month of July, the best place to have been was global emerging markets. They were up 6.8% for the month of July, while as if we had a look at the developed world, their equity markets were up about 2.7%, and the South African equity market was up 2.6%. Listed property in South Africa was down for the month around 3.2%, and the US dollar was also down around 2.6% for the month. But overall, with growth assets performing well, that was positive for most long-term portfolios, and we saw some good performance coming through for the month in our portfolios. An interesting thing to see, at least now, if we look back for the 1 year period, we're starting to see positive numbers coming through because listed equity has been improving, and we've seen growth assets now lifting up returns. They're still relatively muted, below what we'd expect over the longer term, but they have at least turned positive, and we've seen some pickup on that side. If we look back over the last 5 years, fixed income assets have been the place to have been for South African investors. Globally, we've seen developed markets over the last 5 years doing really well, but if we have a look forward, we think that we're going to see much better returns globally from global emerging markets. And even within South Africa, we expect the equity markets to do a lot better on the back of rand hedges, and also as appetite for emerging markets continues to develop around the world. This will be better for your more growth-orientated portfolios, which haven't seen good returns by and large over the last 5 years, but we expect that to pick up over the coming 5 years. Two questions that we're getting a lot of at the moment are around prescribed assets and externalizing of particularly retirement funds offshore. So if we look at prescribed assets, when we make our decisions, we try to make decisions on information that's as close to the decision makers as possible. We're fortunate in dealing with many of the asset managers who have direct lines of contact with National Treasury and deal with National Treasury on a regular basis. The feedback we're getting from those managers is that prescribed assets are not high on the agenda of how finances are run at a national level in South Africa. The other thing around prescribed assets is the way that we manage our retirement portfolios, which is where the prescription would have to come through. We don't generally invest a lot into balanced Regulation 28 portfolios. And if we wanted to, we can construct portfolios, and we already do this, to not have to be affected by prescribed assets if they were ever implemented. The second point is around externalizing of assets, and again, it's something we have in our portfolios. We already have it. Around 30% of any standard portfolio is invested outside of South Africa. In addition to that, one can take more funds offshore, and for many clients we've done that as well, where they've taken the funds directly offshore. In other words, put it into hard currency and invested it around the world in a hard currency basis. This is something that needs to be looked at for each individual client. Some clients will want to take more funds offshore. Other clients with bigger liabilities in South Africa may need to have less funds offshore and more in South African hard currency. But it's something that we've always looked at, and we continue to manage for each client in the best way to suit them. In conclusion, the pandemic has got me thinking about how things happen through other major world crises. The bottom line is that the human race is resilient, and I might even go as far to say that nowadays is possibly even more resilient than it was because of the development of technologies and new ways of doing things. And if I think back, one of the big reference points that I often heard about as a child was what happened in the World Wars. My grandfather was in World War II. And I often thought, well, how did they get through that? And I look at where we are now. If we looked at what happened in the world after a big event like World War II, I think we'll look back in 10 years' time or even less and realize that this was a major impact on the world, but the world got through it, and you still need growth assets to grow your wealth, even if you've had a global catastrophe like we're facing at the moment. So the long-term plans continue. Stick with your strategies, and you will be rewarded, even though we're going through a tough time at the moment. If you have questions, specific questions around any of these topics or any others, please get hold of us. We'd love to chat to you, and everyone is available, so please give us a call.